Is the world now in recession? Let's count the ways. A topsy-turvy bond market, struggling manufacturers, a looming earnings recession, softening home prices, wary consumers. There's also decelerations and disappointments in the Cass Freight Index, retailer earnings, durable goods orders, capital spending, PMIs, May payrolls, semiconductor inventories, and oil demand. And what else? Well, the Morgan Stanley Business Conditions Index showed the biggest 1 month drop in its history, going back to 2002 and very close to its lowest absolute reading since December of 2008. So, what do we make of all of this data? One theory is that the stock market should decline as the economy slows. The other theory is history says when governments print money, stock markets tend to explode higher. So, let me ask you a question. If you believe the market is going down, raise your hand. Hmm, interesting. Well, let's take a look. So if you raised your hand and you think the market's going down, well, you're going to be on the wrong side of history. Let me show you why. This is the diamonds, the DIA, the Dow Jones Industrial Average ETF 20-year monthly. The chart heading on up. Last several years, all the way back to 2009. Recently, we had the downturn in late 2018. We didn't even get down to the 50 EMA. Moving here, the MAC, a divergence. The MAC is showing that it wants the fast line to move through the slow line. It's attempting that at a level of 10 or above. It has strength. Same thing that shows in the histogram. Look at here. Price rate of change. It wants to bottom like it did here. 2015, 2016. I've been telling you this since, say, 4 or 5 weeks ago at least. It's a secret between you and I. Just keep it there. Relative strength, same thing. Wants to bottom like it did here. Stochastic wants to bottom above 50. Volume is fine. Williams wants to bottom back up here to the price chart. That's the diamonds. Let's go to the next chart. We're now looking at Fidelity Nasdaq Composite Index tracking stock, the ONEQ. Essentially, it's the Nasdaq. Look at this chart. Same thing. Heading on up. The bottom here was above the 50 EMA, same as the diamonds. Looky here at the MAC. This wants to bottom. Fastline wants to head up. It's going to do that. Look at that histogram. Moving on up. Strength. Price rate of change. Same thing as the diamonds. Wants to bottom. Wants to head up. Relative strength index. Wants to bottom. Wants to head up. Stochastics. Are you tired of me saying it wants to bottom? Wants to head up? Okay, I won't say it. Williams. Same thing. Moving on up here again, this is the Nasdaq. Let's go to the next stock. We're now looking at the iShares Russell 2000 ETF, symbol IWM. Look at that chart. Do you see any similarities? Now, the Russell is actually behind some of the other indices, but this is struggling here a little bit. It still wants to bottom, wants to head up. MAC histogram, same thing. Look at that price rate of change. Anything look similar to you? Relative strength, same thing. Stochastics, wants to move. Volume looks fine. And then the Williams, you're tired of me saying it. Back up here to the Russell. Let's go look for some more. All right, I'm bringing you to the stock chart settings, and I'm going to do the pull down window here. We've already seen the Dow. The S&P 500, you've seen that too many times. NASDAQ as well, we saw that. And then the Russell. So any of these sectors here, let's check something different. Let's check the materials sector. Let's try that, see what that shows. Moving on up here, it resets. Materials sector, the symbol is XLB, 20-year monthly. Look at that chart there. Now, This one did go below the 50 EMA there in late 2018, as it did in 2015, 2016. Similarity? What do you think? Mac, what do you think about that? Did you raise your hand? Histogram, does that look familiar? Price rate of change. Tell me, what do you see? Relative strength. What do you see? Stochastics. What do you see? Volume looks fine. And then the Williams. All right, you guys are tired. Time for your weekend. So for today, that's ChewDog Charts. Thank you.